All right, welcome everybody, and this is for our presentation. There's a risk disclosure if you need to read that, and this recording is being presented later, so therefore just wanted to make mention that trading is risky and that this material is educational in nature. Topics for today's presentation: we're going to learn to properly, or at least delve into properly utilizing seasonal analysis to learn what time duration for an options expiration trade can work. Most people look at most people don't even look at seasonal analysis. Most people don't realize that we were just joking earlier before we started the recording that the shark migration in South Florida every year, February, and people are shocked when they see it on the news, and they may scratch their head and say, yeah, I think I remember seeing something like that sometime in the past. It's about every year this occurs. So every year there's just something that happens in our world, and every year, apart from maybe some micro and macro changes or major events that occur, like a presidential election or perhaps a recession environment or a global growth environment, most stock and stock sectors do respect a potential or at least a historic seasonal supply and demand switch in the marketplace. There are certain events that occur every year at year ends. People are looking to take tax credits at the end of the year by selling their losing stocks, and they tend to defer the winning stocks and their profits, and then they'll sell out towards, typically the second week of January, as you get what we call the intermediate January sell-off in the market. Then you come to the first quarter, which is what we're doing right now. We're coming to the end of the first quarter, and you're going to get this cross-current wave of quarterly expiration, quarterly adjustments, and there's a lot of different shifts and sector rotation that we see in the marketplace. People might be looking at perhaps stepping off of a major move that might have occurred if you look at the biotech sector or transportation sector, and a lot of these stock sectors that have really taken off, and you may say, well, gee, the energy space and the OIH hasn't really moved up yet. And so when you take a look at maybe natural gas prices as well, you take a look at maybe materials, some materials sector, and you take a look at other stocks out there in the world, you'd say, gee, not all stocks have exploded and have surged to new record highs as what some people think. So there is a place for seasonal analysis, and when you get and take a look at seasonal analysis, it's not just a matter of, gee, when does this particular sector bottom out and when does it present buying opportunities? It's also what's the duration of that strong trend on average. And so I think there's two things, as we talked about before this recording. There's a four-letter word that we all need to realize, remember, and understand. It's a four-letter word. It's not vulgar. It's time, T-I-M-E. Time in options is very critical. Time in trading is very critical. And over time, as they say, time heals all wounds. And in this market environment, it's amazing that here we are, over 9% year-to-date gain in the stock indices on average, especially in the S&P as measured by the S&P 500. And there's a lot of people that have not made money in this market or have lost money because they were betting that the stock market couldn't go any higher. They didn't believe it. Or they don't have trading capital to get into it. And these are three areas that I'm not guessing on. These are three areas that people are telling me about. Several weeks back, we were at the New York Traders Expo. Many of you may have been there. Several months back, we were at the Las Vegas Traders Expo. In both presentations that I do, I try to give out educational information as well as current market conditions and outlooks. And in both of those events, we pretty much had helped people to understand what to look at in the direction of certain markets. And it's been a fun ride. But there's been a lot of people that have come up to me and said, listen, man, I got burned in the markets. I just don't trust the markets. We did a presentation And I know this was recorded. It was a webcast for the Traders Expo. I was moderating a Forex panel, and I polled the audience, not because I was required to. I was selfish, and I wanted information for myself. And what a better way to poll an audience than professional traders or people that had spent money to come to a trading conference. So, I mean, it's not fun and games. It's a trading conference, right? So people are either interested in trading, used to trade, are trading right now, and these are regular retail trading speculators type individuals. What a better way to poll an audience, right? So I asked the audience, I said specifically, how many of you are trading just Forex? And not many people raise their hand. For the majority, I'll just give you the short of it. The majority of people were interested in being diversified across the spectrum of the market. Half the audience were looking to learn how to trade Forex. So the majority of people on this Forex panel weren't the audience. They weren't even trading Forex. But here's the kicker. Most of the people said they've stayed out of the market because they don't trust the market and they're nervous. Now, I don't know if that relates to you of where you've been in recent times, but I want you to know that that mistrust of the system exists. And this is right now probably one of the best market environments to trade from a technological standpoint, apart from that little glitch that we just had. Technology is a lot better today in the use of computers, the speed, and of course the pace and delivery method of information. Now, that pace and delivery method of information is also harmful because I think a lot of people have stepped off the investment field because the media has been pumping nothing but negative news. And I want you to remember something. Since I was a child, since I was a beginner working with George Lane, and if you don't know my past, I started working at the Chicago Mercantile Exchange as a runner in 1977. I started working with George Lane in 1980. George Lane created, or is credited with creating, the indicator that you probably know or use as such as stochastics. I had a lot of great influences back in my early years, and of course that was in the early 80s. And the first market that they introduced an option on a commodity was treasury bonds, and that's what I was trading. And so we quickly delved into trading options on the bond market, and I did extremely well back in the early 80s. And for the folks that do know me and know my past, that it was relatively stellar, to say the least. But with that said, I think that when we come into the news then, everything was bad. We had, the Russians, we had everything was bad. The media always put the deficits, this, everything's bad that comes out of the news because you can't sell good news. You can't say peace and love. And if you put a television show on regular TV saying like Napoleon Hill philosophies that whatever the mind can conceive, one can achieve, those positive messages, I guarantee you they're not going to get good ratings, and I guarantee you people aren't going to watch it, right? Napoleon Hill said, whatever the mind of man can conceive and believe, it can achieve. I had a positive influence. We talked about that in our Trading Trigger University room this week. As a child growing up in the suburbs of Chicago, we had a very famous resident back in the day. His name was W. Clement Stone, and he was the owner or founder of, I think it was a Conglomerated or Combined Insurance Company of America, something to that effect. And W. Clement Stone, in my 8th grade, came to visit us at Washburn Junior High in Winnetka, Illinois. He came to visit us at the 8th graders in the auditorium there, and every one of us got a copy of the book that he wrote with Napoleon Hill. So even as a young kid, I had maybe an insight into that type of positive thinking. And I'll tell you what, as a trader, you need positive thinking in this industry because it's full of negativity. And as a human being, a lot of us we're creatures of habits, and we have bad habits, a lot of negative thinking. We have to overcome that. So the media, in order to sell, they have to project negativity. We had Y2K back in 2000. The world's coming to an end. We had the Mayan calendar this year, for God's sakes. The world's coming to an end. We had the elections. We had the fiscal cliff. We've had how many positive things has the news talked about? except for can the market go any higher, right? And so I think with all that negativity, it will keep people away from the market, and that's one of the things that has happened. So in essence, topic for today, we need to look through that nonsense. You need to look through that. And you have to understand that time heals all wounds. And eventually, are going to see the economy start to improve, and there's certain clues that you can look for. And then it's a matter of how do I apply money? Having that confidence. Confidence in trading comes through consistency. End of story. And can you make money in the markets? I firmly believe everyone can make money in the market. What I don't believe is that people have an issue with their expectations of how much money they're owed to be made. Can you make a $100,000 a year salary trading from home on a $5,000 account? And the answer to that is hardly. You need to hit the market hard. You need to be lucky real hard, and that's guessing, and that's flipping a coin, or that's packing on a trade. Packing on a trade was what we used to call it, is if you had a belief a market was going to move directionally very strong in a short period of time, you would put everything you got or a lot of your working capital to work in that one trade. And if it worked, boom, home run. That's not the type of trading that gets you into being a career trader year in and year out. So expectations is one thing, and it takes time. It takes time to wait for a trade. It takes time for the trade to mature, as we like to say, as I've been saying for years. It takes time for a trade to mature, and it takes time to wait for the setup. So seasonal analysis, if you say, gee, there's a sector that moves from April through July, then I know that I want to start maybe at the beginning of the trend. If the trend has been down and it bottoms out, there's certain option strategies I want to employ at the beginning phases of a trend move. And then I need to look for confirmation that the market and that stock and that sector that those stocks are in are moving up. I hope that made a lot of sense to you, because there are certain things that we can all look at to make a better gauge or judgment of what the market is doing. Now, one of the things that I've done for a while is looking at the different stock indices. If you're trading stocks, right, there are certain tools that we have. Many of you, if you have Thinkorswim, know that there's the Person's Pivot System, PPS, and the Person's Pivots. They're two separate indicators. The moving average with the buy and the sell signals are the PPS. Then when we overlay the pivots, we get an indication that we have a targeted area and what the market condition is. One of the cool things that I'm going to share with you is this. Let me get rid of price real quick. All right. So, and I'm going to get rid of the moving averages. I like to do this as well. Okay, so now all we're left with on this board is a red line, which is resistance, a green line, which is support, the blue line is a pivot point, and this gold line, which is a moving average. At the end of the month, at the end of December, it recalibrates and it tells you, hey, we are now, the blue line is above the gold line. But here's all you really need to look at, is this red line above that red line? Of course it is. Is this green line above that green line? Of course it is. So at the end of December, it's telling you, hey, for the month of January, the market condition is giving you an expectation of a higher high. So it's giving you condition, bullish, and target ranges that if the market comes into support, look to be a buyer, or if you throw a different indicator up on that, like a momentum indicator, which is what PPS is, it will give you a guide for a trigger when the market does turn bullish unequivocally. All right? So all of a sudden, at the end of January, you come into February, all of a sudden, notice that it's kind of intriguing that we had a great bull run in the market, but here we have for the month of March, the high is not projected to be as high, and the low is not projected to be as high. So we're having kind of a neutral reading here that perhaps it's signifying that the market may be coming to a pause or a turn in condition. What we're looking at underneath the market is an advanced decline comparative ratio of just the S&Ps, which is very interesting because a lot of people do not, if you're trading stock indexes, we have several indices and we have several sectors that we look at. If there's 500 stocks in the S&Ps, 30 stocks in the Dow, 2,000 stocks in the Russell 2000, 8,000 stocks in the NYSE, there's different components, 100 stocks in the NASDAQ 100. Each one of these sectors represent different amounts of stocks and different kind of targeted stocks. Targeted meaning technology, blue chips, high dividend yielding, small cap. And so it's interesting that if these are cap-weighted indices, why don't we take a measurement of what those stocks and the and this is a key word, participation rate is. Is the index moving up in association with the majority or a big move in the amount of stocks within that index moving up? And there's a little indicator here that we use instead of looking at individual volume bars called on-balance volume. And it gives me a better gauge or trend direction of the market. More importantly, what it's designed to do is it's designed to give me a participation rate. Is the trend moving up in association with more stocks than not? And is there volume associated with the move? And so with that said, now we can become instead of listening to the news that wants to maybe keep you out of the game, all right, what you now can say is, hey, guess what? I don't know about what the news is talking about, but there's a lot of people here that don't believe, and there's a lot of stocks that are starting to become associated with this move up. There's a lot of stocks that even back here in January, at the beginning of the year, that we're starting, and I'm going to put in the crosshairs real quick for you. Get the crosshairs. There we go. Back here, we saw an upsurge in volume. The market came right at support. It predicted resistance. It predicted a higher high, and it's predicting a higher high, which we're at right now. We've had good participation. This is a daily chart, by the way. I'm going to change this to a weekly, which, by the way, for our students that are in the room today, this is kind of an insight as to what we're going to be doing in a Monday morning's planning and scanning. But most of you that are in this room, there's a bunch of people here that are current students and clients that know that my message has been for quite some time that we are bullish this market. There has been great participation to the upside, and it's not time to get short. One of the things that I am looking at right now is the fact that, and I have a little bit of reasoning to suspect that this surge, this move up, is so strong in the advanced decline, it's a little too strong. It's kind of like everyone started to get long stock, and now you're going to see a pause in the market. You're up against a very important monthly pivot resistance. Next week we have what? Options expiration. So there's a lot of things that are going on, and that's just the S&Ps on a weekly basis. So I'll take it through with you on the NASDAQ. On the NASDAQ, we haven't quite hit these highs yet in the NASDAQ, but we are starting to see more participation, and this purple line is exactly what I've just described. It is an advanced decline on just the NASDAQ 100. So this gives you kind of like the equal weighted ETF on the NASDAQ, which takes Apple out of the picture. Let me bring this into focus for us. There we go. All right. So what I wanted to bring into focus was just to take a little crosshairs here. The reading from the amount of participation of stocks on average right against this highs, we've exceeded this high. We haven't exceeded that high, right? And one of the things we want to start to spot is to see if there's divergences. If price makes higher highs, then we're due, and we don't see a participation in the amount of stocks making that high, and that we didn't make a higher high from this peak, but we have made a higher high from that peak. So from time perspective, from these highs to right now, we've made higher high. And as you can see, from the advanced decline in the NASDAQ 100, we're not quite at that level, okay? And more interestingly enough, we're not seeing a huge volume participation in the NASDAQ. So one of two things has to happen, okay? Either this is signifying that the market is coming close to the end of a trend, all right? It's coming close to the end of a trend run. It's going to pause. Or this sector, which has been weaker, is going to start to catch up to the broad-based market rally. So we want to look for further clues and evidence to that effect. So we kind of turn to our seasonal analysis and say, gee, what time of year does the NASDAQ really start to perform? And it's funny because computer technology, high tech, and internet, those three spaces start to begin a seasonally strong period of time in early April. Folks, that's about a couple weeks away, all right? So I'd have to say we might see, and I want you to be aware of this, we might start to see a push or sector rotation that comes out of certain areas that are overbought, that are due to decline, all right, that end their seasonal time frame, one of which, by the way, is XBD, broker-dealers. Another sector that starts to lose its bullish momentum is biotech. So those two sectors are going to be kind of maybe potentially in trouble. When we take a look at even the NASDAQ Composite Index, we find out that Friday formed a doji formation, which is interesting, and we are near its predicted person's pivot monthly resistance. So we might have a little bit more follow through to the upside on this move. We don't have any definitive sell signals, but last week, the big push that we had, and you got to admit, let me zone this up for you, all right? And this is the type of analysis that we're not even turning I don't want to even listen to the news, okay? Because the news is just going to tell you, and if you turn on CNBC, and I don't know if you feel like me, but I think all they're trying to do is create havoc and entertainment to boost ratings for whatever reason. I haven't seen and understood or can tolerate personally the debates or arguments of some of the anchors that go back and forth and the bantering about interest rates and the economy and because it doesn't have any impact in my life. I don't want to hear another man's opinion that, really isn't a mover or shaker, right? Do you? I mean, think of the reality of this. I want to listen to an anchor who has no influence to the Fed, no influence on fiscal policy changes. He's just bashing his mouth out. How is that helping me as a trader? It's hurting me if I listen to that garbage. I was going to say gobbledygook, but garbage. It's going to hurt me as a trader because my subconscious mind might be influenced to what I see in true testimony or true market analysis. The fact is that the trend of the advanced decline on the NASDAQ Combined Composite Index, and that's what this AD comp line is all about. It is above a moving average study. It is making a higher trend. Price is going up, and on-balance volume is going up too. Except for now. Now, the story is today or this week's close, did it break out substantially higher than any other prior week? And the answer is absolutely. We just broke out of that peak. So now as an analyst and as someone that's trying to make up his own decisions, was this rally, which was an incredible surge, why didn't it really surge past the prior week's volume levels? Because it wasn't maybe on true definitive increase of participation of new positions. Perhaps it was people that went short the market. And so I must add that looking at the market here, we had a doji on a monthly chart on the NASDAQ Combined Composite Index in February. The month's not over right now. It's been in a long trend. How long of a trend? Well, we all know since '09. So, one of the things that's kind of cool, system generated a buy signal, had a tear. You've had 3 legs up. You're forming a potential, just wanted to point this out to you, you're forming a potential rising wedge pattern. We might see a little bit solid more input up there, but on a comparative note, this bothers me longer term. And the fact that the volume levels are just starting to pop after this whole time, I think we are due for a little bit of a pause in that sector. So between now and April, I think we've got to see some participation come in the market. But I can use these tools to make a better trade decision versus looking at what's going on in the news. So these types of techniques are very important, not just to say what's going on in the Russell. And the Russell just broke out to new highs. But I want you to take a look at this. Look at let's call it the hole, the gaping hole. All right, so let's take a look at the gaping hole that existed between when the market did finally take a surge to the upside. Anytime the market, with the advanced decline to its moving average or trend, surges and leaves these types of gaps, you typically see corrections in the market. Nice trend up. Finally, the indicator calls a turn to the market. You got to sell off. The market's sitting here giving you a shot of understanding that the market is starting to weaken. The trend starts to move lower, and it starts to sell off with volume. But one of the clues that's flashing a warning sign is that the market got a little ahead of itself because there's too many stocks that moved too far away from a moving average, as well as price. And now we come to looking at where we're at right now. So while we could see a little bit further upside, what really kind of bothers me, and you might pick this up already, where has all the volume gone? We have a tremendous breakout, okay? And now we have people becoming more complacent in the market, now believing now's the time to start looking at some of these stocks. Now, it might be still a good buying opportunity, right? Because we do not have a definitive sell signal. But for the first time in a very long time, and I put it right out there to everybody in the room that's known my work, that's listened to me before, I'm just now warning people about potential turns coming in the market. I've been bullish all year. So I just wanted to say that that's one of the things that part of our presentation is how do we search for setups in stocks, ETFs, futures, and Forex and markets. There are specific tools that you and I can use. And I just went through, when it comes to trading stock and stock indices, there's specific tools that we could use. The one constant denominator, that we could utilize is Person's pivots to help us guide. Right now, every index that I've posted, all the indexes are coming close to their respected projected resistance targets. So I want you to understand that how we search for setups, this is one way. How we learn to apply the best option strategy for various market conditions, both directional and non-biased, comes from a little known pattern technique, and it's called trend to consolidation. A market that trends too sharply. In other words, if the market moves too far too fast, it typically doesn't see tops take longer to form than bottoms. We call them complex tops, you call them rounding tops, you call them distribution patterns. There's all kinds of names that are put onto them. But typically you've heard the phrase, tops take longer to form than bottoms. And so with that said, a market that has had a very strong trend that's entering, hasn't begun, but entering to lose its seasonal strength, then you're going to probably look at a situation where it's going to get choppy. The market, you want to look for that choppiness and look for that the market price to start to develop some inconsistencies. And then now we can start to say, listen, do I want to bet that the market's going to crash and burn, or do I want to bet possibly that the market might stay in a little trading range and look at perhaps an option strategy that would be bearish to neutral that if the market just went into a trading range for a while, you could profit from. And one strategy is called a credit call spread. But there are ways that we could look to apply these techniques to maybe look for appropriate risk and reward opportunities. But I think another aspect that we need to understand is how much time is committed to the trade and how much capital is required for the trade. If you have a very capital-intensive strategy, and if it takes a lot of time, it's going to take a lot of energy out of you and focus and concentration. And it's going to maybe deter you from missing other trade opportunities. And that's where options can really help you to put a bunch of positions down in conjunction with looking at seasonal analysis, because the seasonal analysis will help you to uncover what the time duration is. So how much time do you need to wait in a trade? Whether if it's going to expunge the bullish effect of the market or begin a seasonally strong period of time. Now, what can I do for you? Folks, for 34 years, I've been a veteran trader and industry specialist. You know, I've written many books in the market, part of the Commodity Trader's Almanac, candlestick and pivot point trading triggers, launched so many different platforms using pivot analysis. It's incredible. We revealed in our latest book, Mastering of the Stock Market, one of my favorite longer-term quarterly pivot analysis. Some of you that are at Thinkorswim know that we use option expiration pivots, right? And one of the things that I'm going to share with you right now is, and I'm going to go back to my charts, knowing that I just said that, I've written many specialty courses. We have advisory service and newsletter. And just so that you can take a look at something, just to share with you, this is a quarterly pivot. So look when it started. You can look down here at the date, January through March, okay? So if you take a look at the end of March, this is a quarterly pivot. We're not just at a monthly pivot area in the IWM. We're also at the expectations of the projected quarterly resistance target level. That, to me, my friends, is going to be an interesting level of resistance. I would start focusing on maybe a higher degree time frame on intraday, like 30 minutes, 60 minutes, and look to see for any development patterns, like something up, like we get low close dojis. We start to get some maybe a little bit more of a, like perhaps an M top formation over time, a day or two or three. Because remember, at any point in any given time, one or 2 days of a month generally might mark the high for the month. 1 or 2 days might mark the low for the month. So looking at the element here of the marketplace and taking a look at a monthly chart, we probably are going to expand this little range and come back down. So if we get closer to that monthly and quarterly resistance as we get into next week, any further gains, I don't think they're going to give a chance for bears to make their money back yet into expiration. But I am telling you that I'd be very cautious up here, at least in the sectors that are the most significantly overbought. You might see some money come off the table there and put to use in other sectors that are significantly not performing, which would be the Russell to the NASDAQ 100, all right? And then you can start to gauge some top option strategies for those. So when it comes to what I've done, I've developed, as you know, several indicators such as the PPS and the Person's Pivot Study and the high close doji, low close doji scans. You know, I'm an educator as well as a trader, and we do live trading mentoring, and we founded Trading Triggers Educational Program. I also run in one of my advisory services, and I'm very proud of this because the guy that I work with is a good friend, and he's a very astute technician. Tom Asprey is his name. He actually helped Gerald Appel, create the histogram component of MACD, otherwise known as MACD, Moving Average Convergence Divergence. Tom has a very prominent place in technical analysis history. He's very well respected and liked amongst the, I would say, inner circles of technicians. Greg Morris, John Murphy, etc., etc. And Tom and I work together with, and that's why it's PA, Person Asprey, Stock Alerts. Part of what I'm going to share with you today is the fact that this year we only have, because of, we've been on the right side of the market, because of the technical tools that I've just shared with you. This is some of the stocks that we've been in. We've got only 17 trades. Right now, we just bought SLV the other day, by the way, so I think we're just up a penny, down a penny, something like that in SLV, by the way. ASPRAY, Rosemary. And that, thank you for asking that. Asprey, Joel G, thank you. In the meantime, if you take a look at some of these stocks, you got SunTrust, BB&T, those are regional banks earlier in the year. We did get smacked a little bit on Yum, BHI, Baker Hughes, Devon Energy. Notice that those are energy sectors. So we have some banks, some regional banks, really dig down deep. Energy stocks, we've got a little bit of, one of our biggest percentage losers was in A&R, Alpha Natural Resources, which is kind of interesting because the coal sector just started to come alive this week. If you take a look at A&R, if you look at James River Coal, JRCC, if you take a look at the coal sector, you'll notice that that started to pop. Our other big loser was Magnum Hunter, 22 cent, but it's a 5% loser. And you can notice that we've got some consumer stocks like a Walmart, a Coca-Cola, a Macy's, and the last one was Verizon in the telecoms. And it's kind of interesting because in the telecom space, it was really simple. It's just following a formula plan of what areas to look at. Now, these were not option trades. These were just stocks. They weren't leveraged, and that's what we've done year to date. So I think it just kind of to show you that this market has given a lot of great trading opportunities for those that have been willing to accept the risk and understand what to look at as far as the right technical analysis education. I think a lot of people got confused, and a lot of people haven't been focusing on the right areas. And there are some wonderful tools out there that everyone in this audience can use. I'm not sure if I poll the audience and I can find out how many people are Thinkorswim clients, but I think a lot of you are. We did a presentation on how to use the Thinkorswim scans with the person's pivot study. And I'll be honest with you, a lot of the trades that we come up with are trades that I come up on scans. And I you know, if you haven't seen that, let me just share with you real quick. And I'm going to go over to this page, and you might be interested in this because when we sit there and we scratch our head and we say to ourselves, gee, I'm a little concerned with the market here right now for the indices. But when I take a look at specific scans, all right, one of my favorite scans that I like to look at, and if you notice here, and I talk about this in one of the books, is that if the market is very bullish, right, then a 10-day moving average, how many stocks are above their 10-day moving average in the S&P 500? A 10-day moving average isn't a lot of time, right? Well, if you take a look at it, out of the S&P 500, nearly 441 stocks are above their 10-day moving average. So you got to dig down a little bit deeper and find out. Let's Abbott, take a look at ABC and say, oh my God, look at this stock. It's out of control. ADP. And by the way, notice that not only the indices themselves are at monthly's pivot, predicted pivot, but a lot of the individual stocks are as well. So we take a look at some of these names and we go, wow, really surged on volume. And that's kind of a cool thing. So there are a lot of stocks that have really given some decent buy signals, without a doubt, but now we're finding that maybe in this space of the S&P 500, maybe there's just some names that are due for a correction, which, by the way, Amarin Corporation generated a low closed doji and a daily sell signal, and of course that is a utility stock. So the point is that we've got a lot of names up here that are starting to show, like another low closed doji is in the utility space, that have surged near resistance, and this stock sector is significantly showing a little bit of overbought condition. How about how many stocks are below the 50-day moving average? And, well, does that surprise anybody? Apple. So there are some things that we can look at and ways to measure the market other than listening to the tube, other than looking at MACD, other than looking at stochastics, other than looking at Bollinger Bands, other than looking. See, you are looking at indicators. If you're looking at those things, you're looking at indicators that are measuring price. But there's a little bit more to research and analysis tools that you can utilize to help quantify a trade and start preparing for trades. And that's where seasonal analysis and my person's pivots and everything that I've gone over with you this morning can come into play. Volume indicators for trend strength, AD comparison, and these are the things that I think really can help you. We talked about how to scan for opportunities. It's a huge advantage. If I can scan for, if I believe that and this is one of the things we talked about in November, by the way. In November, everyone was very confused about the transportation sector because it wasn't moving in conjunction with the overall stock market. And I said, folks, the transportation sector doesn't even start to begin its seasonally strong period of time until late November. And all of a sudden, you got a PPS buy signal combined with a high closed doji pattern in the IYT, and that's the Dow Jones transportation sector that you can, and these are the top holdings: BNI, CNW, FedEx, UPS, USC, UNP, Ryder, R, AMR, Cal, JetBlue, Love, Southwest Airlines, and all of a sudden, look at this breakout of this downtrend of resistance in the on-balance volume that came in associated, so that this started to show you that there was widespread participation in the volume. The health of the market of the sector was moving up. Meanwhile, you were being bombarded. The general public was being bombarded with negative news of the fiscal cliff this and the fiscal cliff that and the sequester, and if they can only pronounce the name correctly, it would make me a happier human being. I'm not sure how many times people have mispronounced it. I blogged about the pronunciation is sequester. It's in the Merriam-Webster dictionary, and so you could go look at how it's supposed to be pronounced. So anyway, I got that out of my system. But when you also take a look at different stocks, so this is a kind of a top-down approach. If we're looking at the sector itself to start to perform from a technical basis, I want to see, is it just one or two stocks? Is it all the stocks? And is there volume coming into the trend of the market? And this is the financial sector. And then finally, we get to the transportation, and this is the weakest, the weakest link of the chain. But we have seen the NASDAQ sector start to pull up, but there's been no volume. So that's why there's been, if you can see the disconnect, that the trend is not, even though it's in a buy signal, there's no volume associated. That's why you're not seeing a push in prices. Unlike volume in the financials, there was a push in prices. So if you can learn, all right, I have a checklist of things I need to do. I want to see what the seasonal time frame of this stock or the sector is. I want to see if there's participation in this market other than just listening to the boob tube and volume bars. Is there participation? And now let me drill down and say, I want to come into this stock. Now is where you can, as a trader, start to scan. If you're using Thinkorswim or if you're using Genesis, I mean, we have several different scans I can go with, and we'll show it to you right now. Long stock daily. How many daily stocks on Friday generated new buying signals? And are there any deals coming up? I mean, everyone in this room wants to find out the next best trade opportunity. Here's one. It's called Marathon Oil Company. Remember that one? Marathon Oil generated a high closed doji. It generated a buy signal. If you don't think that that's not a bad surge, and that surge in volume means something, it does. If we change this to a weekly chart real quick, it's been in a weekly sell signal. It's coming up against that little resistance of that moving average there, just to give you a thing. But the seasonal trend, friends, says that this stock continues on a tear. So now I can make an educated decision. If I like that pattern, it came near monthly support, which is the green line. It's had a certain appreciation in move volume. if this is a stock that has not participated with a broad-based rally, if you see the indexes and some stocks sell off, there's a lot of people that might rotate money out of one sector into another. Take a look at this one, Joy Global. I think I even blogged about this. Joy Global, and let's take a look at a weekly chart. It really hasn't done anything, but it did trade against monthly support. And the reason why it hasn't done anything is it really starts for the next month or so, you have a seasonal uptrend. But boy, I'll tell you what, as this market's just kind of trying to break out of this old resistance, I'll tell you what, it's breaking out with a little move, a little attitude or participation with volume. So if you can get above this pivot area and you see an increase in the trend direction of the on-balance volume or the volume indicator, guess what? There's another stock that, is there a lot of risk in this stock for where your stop has to go? No. Emerson Electronic, Big Lots, Ball Corporation, BLL. So, I mean, notice that it moves up. It really hasn't participated in the current rally high. And here's a stock that, I mean, probably will be in the news if it rallies and breaks out to new highs. But it just now starts. And what I like to see is a stock that's in a seasonally weak period of time, it goes down in conjunction with its seasonal. So a market that's in sync with its seasonal analysis tends to tell me that it may continue in its seasonal analysis. Okay? So there is some of the aspects that we look for. And you got to say, is the price, it's not a huge move to the upside, so maybe look for entry techniques. And now you can just start to scan and say, gee, if this market goes up or it moves slowly up, how can I profit with an option strategy? And is this company optionable? So that's the next area. So you're digging for trading opportunities. I don't think I would touch Cameron International. It broke out. It gave a buy signal. It's on its highs. It's not on big volume. All right? That to me is a warning flag. So this is how we look at different opportunities. Notice that in the S&P we had 22 signals that generated a buy signal the other day, and out of that, on a daily basis, out of 22, we had 7 out of 22 are all in the energy sector. Does that mean something to you? It means something to me. It means that there's money going into the energy sector, not just one stock. I like that. I like to see that. So there is still buying opportunities out there. We might look for, here's Newfield Exploration. I don't even know who this company is, but taking a look on a daily chart, high close doji, not a lot of risk in that trade, that's for sure. I have to do a little bit more research, but look at the seasonal trend of this market. It's been in a downtrend. And it's now just beginning to come into its seasonal strong period of time. So here's a stock also that we're just running down the list. How do we scan for opportunities? Do they exist in this environment? How can you make money? Well, when you take these opportunities and you start to scan and you say, listen, how much capital? Because, we all don't have unlimited resources. We're not, unless you're running a $1 billion or $2 trillion fund. That means you have to smartly use capital, and you can only put so much capital down per trade. If I know in the next 60 days or 90 days, I know that by April the trend goes up in this stock, then I know, or by May, I know that by April, if the market's at here or a little higher, maybe if it has options on it, and I don't know, because I'm seeing this scan for the first time with you guys. And this is pretty exciting, because now I can say, is there some volume associated with this move? Has there been some other stocks in this sector that's moving up? Could we see a breakout to higher highs? And that's what you got to ask for. First of all, you got to say, what's the trend of the market? And if the trend of this sector, if energy, for example, is one of the strong seasonal sectors, then I'd say, gee, I want to start focusing in on some stocks in that area or some option strategies. So, again, here's Williams and Company. If this market gives me a reasonable explanation, at least a reasonable analysis that it has a fighting chance, an equal and opposite, and this whole sector looks to be strong. And as you can see, the trend of this sector is going up until April. Then I now know what the time duration of an option strategy might be. Now it's about looking at what strategy is right for me. So the components of an option pricing model is real simple. You got to take a look at the stock or the price of the commodity, what the strike price is, your interest rate, which we all know is next to nothing, your dividends, your skew, volatility, and these are the things that comprise the components of the inputs of the option pricing model. Time left until expiration, underlying price, dividends, and of course the key word, volatility. And I love that word, volatility, because option models will only give you what expected rate of return or expected value of an option is under current volatility. If a stock right now is entering into a seasonally strong period of time and it's been bottoming out, it probably has a low IV. It probably has a low implied volatility. And that tells you that it's eventually going to start to pop. And that's the predictability that seasonal analysis can help you. Because you have to understand, I can look at the stock today and say, hey, what's the implied volatility of this month versus the next month out? What's the implied volatility? And you got to understand, option pricing, the two other components, intrinsic, extrinsic, defining fair value, but volatility for most option models is the most challenging input to estimate an option's price because they don't know when the market's going to actually move and they don't know what type of price action is going to occur when it does move. Let me repeat that. An options pricing model does not know based on the volatility of tomorrow. Is tomorrow the day that the stock has a tremendous move straight up? We don't know that, do we? So what we can say, for example, this is probably not the greatest example, but we were talking about the coal sector the other day. And, you take a look, it doesn't do anything, it comes down to support. You're in a seasonally strong period of time. This sector starts to enter a seasonally strong period of time. I don't know if it's going to be today, tomorrow, the next day, or today that we see that type of a move in this type of stock. But I'll tell you right now, the volatility expanded because the conditions changed. Seasonal analysis will alert you ahead of the game that, hey, perhaps it's time to look at this space. One that we did in the room, which, just look for little things. This is a transportation, Eagle bulk shipping. I'm not a shipping expert, but it had a seasonal aspect to it. It had some volume going to it. We had some people in the room take the trade. Just one of the concerns is that when it finally does move, by the way, high close doji, blah, blah, blah. These are things that, even though that this is not a probably big optionable trade, the price of the stock itself is an option. It's a $2, $1.90 stock, for gosh sakes. So what I'm trying to explain is that the volatility will change. And with seasonal analysis and lining up your trades and looking at the stocks, you're going to see one of these days someone turn the buy switch on, and that volatility is going to change. And it's going to change dramatically, okay? So volatility is a measure of a stock price fluctuation. It's by far the most challenging of the option pricing inputs. And volatility, it's kind of like what we look at, the asset price fluctuation around the middle value. It's portrayed as a standard deviation or variance, by the way. Ignoring volatility, it's a huge mistake. It's the first thing you look at before you buy an option or sell an option or implement an option strategy. So there's a series of things that you need to know as a trader, and I think can help you make money in the markets, whether you're trading outright, whether you're looking just for stock opportunities. It's looking at, what's a seasonal tendency of a stock or a market? What is, number two, is there momentum behind the market? Are there participation behind the market? Is there volume behind this trade? So whether you're looking at the indices as we worked through together at the beginning of the presentation, or whether you're looking at individual stocks, and looking at unbalanced volume, it's important to look at what sector you're looking at. It's important to see what the stock, if it's responding to that sector. You may already do this. I'm not sure. But all I can tell you is that when you're looking for an option strategy, and you can say to yourself this, and this is probably an important lesson that I was taught. The market's at a bottom, and I want to do a credit put spread, but implied volatility is very low. That means it's cheap. But if I say, well, then maybe doing a bear put spread, a credit put spread, okay? I'm expecting the market to slowly grind up, right? Maybe I'll just do a naked put writing, or just sell an out-of-the-money put. But implied volatility is low. Wait a minute. It's low because the market's been in a downtrend and the market's not doing anything. And if the market does start to move up as it enters its seasonally strong period of time, that volatility is going to change. And the further price moves away from those strike prices, the lower the values go anyway. So don't misunderstand to not implement a strategy because implied volatility is low. You've got to measure implied volatility in relationship to what the trend of the market is and what the expected price change of the market might be. Does that make sense to everybody? Now, I could tell you this, seasonal trend, we've been working with that and getting that in that presentation, into that platform for a long time. And I helped even write a code and created it. And I also tried to do it with the commitment of traders reports. So in any event, it is what it is. But in the meantime, I hope you enjoyed today's presentation. I told you I wasn't going to go too much further, but I wanted to also, if you liked what you heard, I'm going to share with you a Ides of March special that we want to offer because I think it is the most important trading course, and I'm going to walk through this presentation and this course with you real quick, slide by slide. So if you not interested and you're all good, then I bid you peace and thanks for coming. If you're interested in probably one of the most special offers, stick around and listen to this. Our options trading course, Ides of March special, Stock Trading Simplified or Options Trading Simplified. We're going to include our latest book, which is this Mastering the Stock Market, or the CTA. I'm going to give you a choice. It doesn't matter to me. I would go with the Mastering of the Stock Market, to be truthful, as that is a phenomenal book. We're also going to offer you 30 days to PA stock alerts and my bottom line newsletter. This comes complete with our video analysis reports. We do PA stock alerts videos for the weekend, Tuesdays and Thursdays. You'll hear Tom and I alternate, so you'll hear his voice one day, my voice the next, and a bottom line for those commodity traders. Also, in this special, you will be included to a $100 coupon if you're interested in coming to the April seminar. In addition to that, we are doing a one-on-one mentoring class. It is already scheduled on April 6th. So you're going to get the course, you're going to study the material, and April 6th, we're going to do our one-on-one mentoring based on this course. So I want everybody that gets this, if you can't make the April 6th date, it will be recorded and you can watch it there. Looking at the course in and of itself, and I'm going to share this with you real quick. We're going to have the table of contents. There's several things in this course that I believe most people are not even aware that I have. Take a look at the person, the momentum, how we go through the person's pivots, how it actually works, defined, how you utilize the person's pivots, but more importantly, momentum and narrow trading range breakouts, as well as some other techniques that we just really, most people don't understand the difference between how to gauge a breakout. This is another piece of information that is in the class. So we go through different momentum, we go through range probabilities, we go through ways that most people don't look at analyzing the market, and then how to apply an options strategy. And that is probably, if you do have options education, I think the aspect of missing some of this, getting right down to looking at information, and I'm not sure why Novia is not projecting, so I have to turn it off and turn it on again, but in any event, looking at all the various aspects of the market of an options trader, how to do vertical spreads, calendar spreads, going through ratio back spreads, using how to use this. So most of you probably, if you are an options trader, know some of this with synthetic positions, long butterflies, looking at, obviously this is one of my favorites about the course, is looking in, for example, seasonally strong periods of time and combining seasonal analysis, looking at very bullish strategies, whether you're looking at long calls, vertical spreads, the areas that I like to use. These are some of the techniques that most traders, as you can see, these are some of the areas that we would be teaching in the course. And this is some of the slides. I have to just keep doing this because for whatever reason, Novia's failed on me on this aspect. But here's one of my favorite slides that I think you're going to like. And this, I think, defines exactly what I was talking about in the middle of the presentation, okay? So let me get through this. Remember, I was talking about you look at a seasonal analysis. And if we are looking for, and everyone's saying, hey, how do I get a seasonal trend? Just wait. Wait till you see this, folks. This is cool. So let's say that we nailed down the seasonal trend of the market lasts, say, 10 weeks. So if you know that between maybe with GDX, and this is looking at the gold index. In fact, I did a thing on Tom's show, a Tasty Trade, last year about and I also did a presentation, which is interesting, on Thinkorswim, based on this exact same thing. And we went with looking at some individual stocks and just analyzing what are the stronger stocks within this sector. But listen to this. If you can learn, this is a seasonally strong period of time for this space. And if it's going to be 60 days, then where are your option expirations? 720, 817, 914. If I'm bullish in the market, or I think a sector is going to move up, and I think it's going to move up, and it does so traditionally from the right around the end of July going into about the end of September, okay? And if you want to take a look at GDX, this is fabulous because it actually did happen. But anyway, if I understand that if there's 10 weeks, that starts to, and if the market's been going down, then obviously it's got a cheap IV, or implied volatility is cheap, but I can start to understand that implied volatility is going to increase as the price increase, and if it stays in sync with its seasonal tendencies of the market. As that seasonal tendency tends to cease to exist at the end of September, now I can look forward and say, for how long does that occur? So, quite frankly, it's really a very powerful trading course that most people aren't aware of that exists. There's actually a beautiful section on binary and how to use binary options with Person's pivots. This course is phenomenal. It really is. In fact, part of what we even have in this presentation, and I think this is what a lot of people want, and I'll just go over here to this monitor. You're going to hear the magic fairy dust music again. I apologize for that. So check this out. There we go. So I have a huge section on all the sectors and listing the top 10 stocks in those sectors. So if you can say to yourselves, well, gee, XLI traditionally kind of has a bit of a correction. And then we look at the industrials, so you want to start taking a look at John Deere, 3M, UNP, Caterpillar, which has gotten beaten to, I'm not making that one up. So you want to start seeing if any of these stocks are starting to enter into their seasonally strong period. The best time of the year is from about the first week of March. They've been beaten up, so perhaps this lends to the credibility that if we've seen some stocks overbought, there's going to be money taken off the table on some and applied to others. So I think that is an area that you will start to see opportunities in sectors and stocks that are not on the news. Because the news will always tell you about what's already happened, not what's about to happen. And now you can start planning ahead for your trades. So if you're interested in this, I tell you right now, it's going to be probably one of the best educational formats. Going to give you access to seeing what we're about here. And I think if you're interested, click on that link. All right? And as well, the materials covered for our tutoring in this session is going to be the person pivots, momentum and trading range breakouts, which is how do you define a narrow range and a wide range breakout? How do you trust what breakout and what tools? How do you look at that on-balance volume to really gauge? So if you want to define your trading and really look at the markets in a light that no one else does, and I think you will get a better understanding of how to have more confidence in your own trading so that you can make money. And that's what this is all about. If you'd like, we've had open houses with Trading Triggers University. You've probably been to our open house. If not, after we get done with this tutoring session, we'll invite you back in if you want more information on our Trading Triggers University program. But I'll tell you right now, how we put things together is, I think it becomes just real simple. Scan for an opportunity. If I see the pattern and it's a stock that's in a strong sector, last week I think it was, we gave 3 stocks out: Intel, Dow, DuPont. And all 3 of those stocks were low risk, high probabilities. And all 3 of those stocks were in sectors that start to enter and had not participated in a movement like you saw with like the Google of the world, right? So if you're interested, click on this link. I think everyone will benefit from it if you don't have it. And in fact, if you have questions, you can actually shoot us an email. Our email is at info@personsplanet.com. You can go visit our website at personsplanet.com. One of the neat things about personsplanet.com, and you know that if you are a Thinkorswim client, my indicators, Person's pivots, are already installed. If you go to studies, you'll find Person's pivots are up on the Thinkorswim platform. You can run a scan, and I'm the only individual with my own proprietary indicators that are available on the scanning feature of Thinkorswim. And in our private mentoring, we will go through how to implement that. In fact, part of today's presentation even shows, and I'll go back in time here, it shows that if you go over to add a study filter, so you want to do maybe all ETFs, you can choose S&P, NASDAQ, you can choose whatever you want, and let's say you want to look for a buy signal. That's the PPS, that's John Person's sell signal, labeled sell signal. And then you can change your time frame. You want to look for a daily, 15-minute, weekly buy or sell signal. And then hit scan, and it'll populate a list for you. And then you can see what generated trigger sell signals came. Now it's a matter of applying some technical indicators up there, the ones that we teach specifically, and to see if you can maybe look at what the proper risk-reward ratios are. So I think the fact that they respect my work, and Tom loved my work so much to put it up on this platform, it's pretty cool. So with that said, I just wanted to say, for those that are interested, click on that. It's probably going to be your best educational investment that you've probably ever made. It's a great, great options course. If you're an options specialist, if you've taken classes from my buddy Ron Ianieri, and Ronnie is a great guy, if you've taken options education from Donnie, I mean, if you've taken options education anywhere, you will not find me, probably because I come from that same school. I'm cut from that same rug. I come from that old school back in the 80s. So First Options was, one of the integral people that taught us how to use, not just deltas, but applied volatility. And that's the first thing you look at, right? But what they didn't teach you was the expected change in volatility based on market conditions. And so we used to do little studies saying, well, what if the price goes here, and if it does so in the next 3 days, 5 days, and it would say what would be the change in volatility, and then you could get a theoretical price of what your options would do. And that's how we would start to kind of get a feel for what we should pay for an option, and if I'm right and the market moved my way, what I should be able to get out of that option for. So I do go in through some of that, and I think the important thing is, for traders, is you got to turn that news off. You got to be aware that there's a report coming out. I get that. I understand that. But man, I just think that probably for individual stocks to understand if there's a buyout, if there's individual stocks, if there's a disclosure from USDA, or if there's something from the Department of Health, or I understand that. I understand that that's vital news. As it relates to an individual company or an individual stock sector. But to listen to the boob tube and to listen to these people on CNBC babble and to debate whether the market's going up or down all day long does nothing but confuse you and distracts you from your job of making money in the market. And I mean that. But here's the good news. You need that stuff, because in order for people to make money in the market, somebody's got to lose. I hate to be callous, and I want you people to get the right education. It's there for you. And it's not just affordable, but it's probably one of the best investment education. I have educators taking my information. Trust me on this one. So, anyway, I wish you peace, and thank you all. I hope I gave you some insights as to what the markets we're looking at, what stocks are out there, some of the concerns that we have in the market. There are some values in some sectors of the market right now, and I think that if we do go through a sector rotation phase of the marketplace, you're going to see evidence of that through the techniques and the forms of analysis that I've just shared with you. And then you can apply that knowledge and develop an option strategy. And one that is, just remember, and I just don't want you to think, I mean, we did pretty well with PA Stock Alerts this year. Tom and I have worked together now for 3 years, and we've done overall very well. And I just want you to know, it's time. It takes time. Not every trade's a winner, and it takes time. But all of a sudden, you start racking up trade after trade after trade, and you say, oh, gee, this is second nature, like tying your shoe without looking. And you say, hey, I can do this. But if you are doing the same old thing, and if you're listening to the news looking for the next great trade idea instead of developing it on your own, if you don't learn a skill set, you're not going to be a master at this industry. And you know what? These techniques are techniques that a lot of successful people use. I know. I've traded and taught them, and I've learned from some of the best. So with that said, thank you all very much, and appreciate everyone being here. If you want, once again, take advantage of this. Phenomenal. It's April 6th, so you got to buy it. You got to invest your time. You got to study the course material. And April 6th, we get together one-on-one. We have, just for those who bought this course, we have that. And then, if you want to take advantage of coming out to see us in Las Vegas at Aria Casino, Dan Passarelli, myself, our trade instructor that does a phenomenal job, his name's Butch Heading, with Trading Triggers University. The whole gang will be there. My wife will be there. Everyone will be there. We'll have one of our greatest, best new moderators and associates here, Sonia Irwin. Sonia will be out there most likely. And we are going to have a great time, great education, solidified trading with other traders, and learning how to implement this in real time using Dan's analysis, and Dan's going to try to pick me off to see what he's probably going to try to remind me what I did know once that I may have forgotten myself, or maybe he could teach an old dog like me new tricks. We're going to find that out. So with that said, I wish everyone a great weekend. Thank you all very much. Take advantage of this. I think the link and the offer will be up for the weekend, all right? And it's important that you get this information, and you get this information fast, because April 6th, once again, April 6th is our mentoring scheduled time to go over the course material for you and I. You and I are going to go over this course material. In addition to that, also sending you an autographed copy if you go fill it out and you buy this online, or send us an email or call the office, say, hey, I want the Commodity Trader's Almanac, or I want John's mentoring, the Mastering the Stock Market book. I would give you the Mastering the Stock Market book with this offer, because I think it really is something that belongs in everyone's nightstand and not your bookshelf. You need to be reading this book and following the information with the techniques for entering positions, as far as techniques for execution, the snapback or stops that we set. If you get a buy signal, a sell signal, and the market, you're looking for the market to pull back to you, and it doesn't pull back, or you don't get filled, then you need to maybe place a stop to go with the next wave of momentum in the market. Those entry techniques is one thing that's also discussed, and how to place stops, not just below specific lows, but what kind of lows, like the last conditional change. But more importantly for stocks, there's a percentage that you can add to that, so that you can use a systematic form of stop methodology, and that's in the Mastering the Stock Market book. So any way you want it. You want the Commodity Trader's Almanac or the Mastering the Stock Market, you get that. You get the coupon for our seminar, $100 discount. I mean, that's almost right there, a pass at the wheel at the, I'm just teasing about the slot machine, but here it is. But more importantly, 30 days to PA Stock Alerts in the Bottom Line newsletter, because what's really cool is what I've showed you here is trades that we actually post